Hi, welcome back everyone. This is the part 2 of Dr. Ismadi and Sabariah case study. So in the part 1, we have covered the important information of in the case, and also we have taken out all the fact findings of the couple. So in this part 2 of the series, we will first look into the structure of the cash flow statement and net worth statement. Then we will do the calculation on home and car financing. Finally, we will construct the cash flow and net worth statement based on the facts given in the case. Right. Now, first we look let's look at the structure of a cash flow statement for a period of 1 year. So the cash flow statement consists of cash inflow, which is the income, and cash outflow, which is the expenses. Okay, and then the net cash flow shall be calculated by deducting cash outflow from cash inflow, and then the result can be surplus, deficit, or equilibrium. Now, the cash inflow or income consists of salary, bonus. So bonus ni as number of month salary per annum, and then fixed allowances, which may include traveling allowances if any. Okay, this will be the standard income of a person. Then we have to minus out the EPF deduction, tax payment through PCB, and zakat payment through salary deduction. EPF deduction is calculated by multiplying the rate of EPF with the sum of salary, bonus, and allowances per annum. While the tax and zakat payment, which incurred during that year, are normally given in the case. Then we add the other incomes like rental, dividend income, sale commission, etc. Okay, with regard to dividend income, it is based on dividend of cash and cash equivalent. In this case, we take dividend on financial institution, which is saving and current account. Cash outflow or expenses are those expenditure incurred during that year. These include the list of expenses listed in the table as given in the case, as well as those mentioned in the paragraph, and also the monthly installment of home mortgages and car financing. For this one, you have to do a little bit of calculation to get the figure. Then the net cash flow is the difference between cash inflow and cash outflow. If the cash inflow is greater than the cash outflow, then it becomes surplus. If outflow is more than inflow, it becomes deficit. Only if there is a surplus, it can be used to finance for additional takaful coverage, education fund for children, and also Hajj fund. Otherwise, the recommendation is whether the client need to reduce their expenses or increase income to get surplus in the net cash flow. After financing the needs mentioned above, then the balance shall be invested every year for purpose of retirement. Okay, the structure for net worth statement consists of basically assets and liabilities. The asset can be categorized as investment assets and personal use assets. The advantage of categorizing as investment asset is for the purpose of asset allocation analysis later for retirement. Okay, so this will we will cover later. Okay, now you can see on the right hand side, far right, there is a column to show the working of the calculation of home mortgages and car financing. This will carry marks as well. And in the middle, we can see there is a column to identify the asset, whether the asset is Sharia compliant or not. Then we have liabilities which consist of current and long-term liabilities. Current liabilities are those which can be settled in short term, while the long-term liabilities take more than 3 years to settle. For example, like home mortgage. Now let's look at the calculation. We start off with home mortgage. There are three values you need to use in the cash flow and net worth statement. First is the current value of the houses, which are the assets in the cash the net worth statement. These normally are given in the case. Second is the monthly payment, which are the expenses in the cash flow statement. And last, the outstanding balance of the houses, which are the liabilities in net worth statement. The other information is on rental value, which is the rental income in the cash inflow. Right, the residential home where they are staying now is a gift from the father to Ismadi. No financing involved. Only second home is still under financing. The calculation on the home mortgage, we use compound interest based on monthly rest, and we use CMPD and mode. The financing amount is the PV, the tenure is N or period, which we need to convert into months, and the rate is I%, which need to convert into months as well. Then solve at PMT to get the monthly payment. For outstanding balance, then we use amortization or AMRT. The input are at PM1 and PM2. PM1 stands for the month of first payment made, and PM2 for the last month payment made. In this case, Ismadi has bought the house 5 years ago, so the PM2 is the 60th month. Then scroll down to find balance and solve to get the outstanding balance as liability in the net worth statement. The apartment bought by Sabariah becomes the third home. Financing amount and other parameters are given for calculation. The house also is rented out, become the rental income for Sabariah. So you can do similar calculation like Ismadi just now to get the value for monthly payment and outstanding balance of the house. For calculation of auto financing or car financing, there are two values given in the case. One is the purchase value and the other one is the financing amount. The purchase value we need to use to calculate the current value of the car by deducting the depreciation amount. Normally, the depreciation rate of the cars are given in the case under assumption at the back of the case statement. You can refer at the back of the case. Under the assumption, there is the depreciation rate given. Just multiply with the number of years purchased to get the depreciation amount. In case depreciation rate is not mentioned, you may use your own assumption. Current value we got from the calculation will become asset under net worth statement. And then the financing amount we use to calculate to get the monthly payment as expenses in cash flow, and also outstanding balance as liabilities in net worth statement. We use simple interest calculation or SMPL to get to calculate for the auto financing or car financing. In SMPL, we use a number of days as the basis. So at DYS, we need to multiply the tenure of financing with 365, which is the number of days in 1 year. The rate or I% we key in as is, no need to convert, and the financing amount as PV. Then scroll down and solve at all to get the SI, which is a simple interest, and SFV, which is a simple future value. Then the monthly payment or monthly installment you can get by dividing the SFV with the number of months during the tenure. Outstanding balance, on the other hand, is calculated by deducting amount paid and rebate from the total amount, which is SFV. Amount paid, just multiply the monthly payment with number of months paid. And then to calculate rebate, the rules of 78 is applicable. So the formula is small n times with small n plus 1 divide by big N times big N plus 1 times SI, simple interest just now. Okay. So the smaller n refer to the balance month. Okay. And then the bigger n, the big N refer to the total month of the tenure. Similarly, for a second car bought by Sabariah, so you can use the same method to get the monthly installment and also the outstanding balance of the car. Okay, now let's look at the cash flow statement for Ismadi and Sabariah. As you can see in the cash inflow, we have a salary for both of them. We have a bonus based on the number of months per year. We have allowances for this case, except for traveling allowances, because traveling allowances is not mentioned in the case. We also less or minus the EPF deduction, uh, tax through PCB, and also zakat payment through salary deduction. And also we have other income like rental income and dividend income. Okay, the dividend income you may or you may not put in the cash inflow, because this will reflect in the asset allocation analysis later for retirement. So if you put the value of the dividend income is based on the saving account and current account, the return. So per year. So if you put the dividend income in the cash inflow, you are assuming that the dividend income of saving account and current account is not reinvested or compounding. So you don't have to put in the asset allocation analysis later. Okay. So if you choose not to put the dividend income value here, also can. But in the asset allocation analysis, you must show that the saving account and the current account return is reinvested for retirement. And then the cash outflow, we have everything given in the case, either in monthly or yearly. So if monthly, you have to multiply by 12 to get yearly, but if given in yearly, you don't have to get the monthly value. Also included in the cash outflow or expenses are the home mortgage monthly payment and car financing monthly payment, which you get the value from the calculation. Okay, now the difference between the total of cash inflow and total of cash outflow become the net cash flow. So in this case, the net cash flow, we have surplus, meaning that the cash inflow is more than cash outflow. If the cash outflow more than the cash inflow, then become deficit. Only if there's surplus, we can use the surplus to finance the additional takaful coverage, education fund, and also hush fund, which the value, if you see, I highlighted in yellow, at the moment we don't have yet, because we haven't calculate the risk management and need analysis. We haven't calculate the education fund and hush fund, so at this moment it's empty. Okay, so after getting the value or the figure that you put in, and then you get the the balance is considered as net cash flow surplus. So the net cash flow surplus will to be brought forward to retirement as one of the available retirement fund. The net worth statement, the values are calculated as at certain date. As compared to cash flow just now, the values are based on a period of 1 year. Okay, now as you can see in the investment asset, we have all the cash and cash equivalent like saving account, current account, tabung haji, ASB, and then we have stocks and also unit trust, EPF balance, and also second and third home, and also cash value. While in the personal use asset, we have residential home and cars, and also gold jewelry for Sabariah. This one considered as personal use asset. Okay, now in the middle you can see the Sharia compliance status. The Hong Leong Industry Berhad are considered as non-Sharia compliant. And on the right hand side, you can see the working of your calculation. When you do your calculation on your financial calculator, you must show the working here to get some marks. Okay, for liabilities, which consists of current and long-term liabilities, which we lump together, we have a credit card balance, we have tax due and zakat due. However, when you do the net worth statement, the figure for tax due and zakat due are not available yet because we haven't done the tax computation and zakat calculation. We also have the outstanding balance of homes and cars, which you retrieve from the calculation on the right hand side. So the difference between the assets and liabilities become net worth. So you must show both couple, husband and wife, net worth, and also the combination. Okay, brothers and sisters, if you compare between the net worth statement and the cash flow statement, since they are working on the calculation, I would personally recommend that you do the net worth statement first because it is quite simple to do as compared to cash flow statement. Okay, brothers and sisters, with that, I end the session and we will come back in part 3 to discuss on risk management need analysis later. I hope we can meet again as soon as possible. Till then, bye.